reverse on the presser.
Okay. All right. Quickly to K-Man, did yesterday's action. I did go into the chat room, and everyone's take from you was yesterday was a nothing day with the CPI, pretty much, right?
A rangy day, right? And
Yeah.
that's exactly what we've got in the major part of the currencies.
Yeah.
Yeah, and on the yen, and you did well to take a piece back. Very nicely traded that one, Dale.
Thank you.
We look at what's happening on the yen crosses, and there's your key to the dollar yen. I think all the yen crosses are holding up pretty well, and especially the commodity yens, energy related currencies against the yen, they're all doing pretty well. We also see it in the euro crosses, by the way. I think that's keeping a little bit of a lid on the euro dollar as well. So yeah, it's like I think for the yen, really, it's not looking too rosy still, in my opinion. I'm actually a tad long in one of the yen crosses, but for the dollar yen, I prefer to wait. Really, I think it's maybe driven more by the crosses, and the dollar yen stay in some kind of a range, and unless we see surprise data later on in the retail sales PPI, because we can't forget we don't only have ECB, we've got a slew of US data as well to come out in between the statement and the press conference. So there could be a case for some saloon doors or double whammies in the making there.
Speaking about whammies, silver breakdown.
Yeah.
Out of that rectangle. It's pretty ugly. Yeah.
Looking weak.
So
there's a bit of trend line support around here, but it's still not looking too great, this silver right now. I'm really sitting on my hands. I'm not short, but I'm just sitting on my hands right now, and not adding yet.
The if you did an Edwards and McGee, just classics, called this a flagpole or whatever, and this wasn't a flag, but some type of rectangle, definitely corrective with a breakdown. It measures 2060, $2 lower from here.
I like that.
Okay, and and that would line up with a line that I have down there in silver, and Blake showed a harmonic that would come in down here.
Yeah.
Around
That's
2040.
the one I'm looking at there, that lower one as well. I think anywhere 20.5 or so. I'm going to I'm going to lose patience if it comes down there. Then I'm probably going to press a few buttons there.
Yeah. So expectation, guys, of the presser afterwards.
Difficult call. It's going to be a close call on anything, but I've outlined, well, we've both Ryan and I have outlined our scenarios in the chat room on the flow show, and I see 4 possible ones, but if you want to keep it simple, it's probably going to be a relatively dovish hike or a hawkish hold, but there is one outside possibility of a hawkish hike, which would mean that they talk much more about QT, giving up PAPP and accelerating the QT together with a hike. If she doesn't give us too much on the weaker economy side, that could be this 10% possibility that we actually get a hawkish hike. But for what rates are concerned, it's going to be pretty straightforward. Either you close below 107 or above 108, and if you're in between, just continue to trade the range.
Yeah, because look at that weekly moving average. Almost looks like, lower would be a breakdown.
I think the close is as far as F.A.C.E is concerned, it's going to be very easy. Well, I think it's going to be very easy anyway.
Okay. So stronger dollar, they're trying to, yesterday came off a little bit, still have a negative week, but really hasn't given up much ground. Looks a lot like the yen. You know, there's similarities. And, you know, are we going to get a leg under 104.50 to take it down here? Are we just going to, you know, this was it to a prior high and we're just going to go again? Those, you know, it's really either
Dale,
or, isn't it?
well, Dale,
Yeah.
you know, the moving parts that we have today is obviously we have the ECB, which is going to influence the dollar quite a bit. But right after that, we have producer prices and retail sales. And
Wow.
Considering, you know, everybody's trying to figure out what is, you know, the strength of the U.S. economy, especially specifically like the jobs market. You know, the first thing that we're probably going to see go is we're going to start to see consumer spending really drop off. And once consumer spending really drops off, because you know, you can see it a lot in the retail sector, but really once that tails off pretty hard, that's when you start losing jobs. So, you know, everybody's like kind of wondering, oh, you know, how long is the U.S. economy going to hold up? And that's why I think retail sales today are very important, especially, you know, and then producer prices following the CPI yesterday, which will, you know, give us a better understanding of what PCE is going to be on, you know, whenever it is the 20 whatever at the end of the month when that comes out. So, you know, there's a lot of
the ETF on
moving
it,
parts.
Blake.
What's that?
There's the ETF on it, Consumer Discretionary Select. So I mean, you know, looks okay. So we'll see if, you know, maybe it's a failing rally, but this is exactly what you're talking about. You know, the consumer's still holding up. So maybe we'll, you know, see this. This is a good instrument to, you know, have on your screen to follow the strength of the consumer. Just
that's interesting. Yeah.
XLY.
Hey, Dale, I know we have about 7 minutes till the ECB. Do you mind if I take over, buddy?
No, not at all.
Oh, all right. So let's do this really quick because I you know, like I said, there's about 7 minutes before the ECB statement. Now we have a press conference coming, you know, obviously in 30 minutes after that, which Dale's going to be on his interview. We'll be in the ForexAnalytix community, just, you know, in the chat rooms talking about what's happening with the ECB there. But I want to lay out a couple of things that I think are really important as far as the euro goes, technically. And you know, K-Man, you mentioned there could be a few different scenarios, you know, and again, to simplify it all, hawkish hold, or, you know, maybe a dovish hike. Could there be a hawkish hike? Could they mess around with the ECB, start messing around with like PEP and, you know, the facilities there potentially? So there's a few little you know, humdingers that they can throw out at the market. Couple things that I want to focus on is really the key resistance that I'm sure, Ryan, you're probably very frustrated with in the euro right now, but could very easily get taken out today, is the 107.70 level. That is, it's as simple as it gets, is its previous support, right? It's current resistance. We've hit it twice just this week. We can't get above it. So if we get above it, it might open up some upside. The risk, though, is just above that is the 200-day moving average, which comes in around 108.30. Channel resistance, which comes in around 108.20. The underside of this broken channel that we followed for months, that comes in right around 108.15. So if you think it's smooth sailing above 108, you have to realize that there is just multiple levels of resistance that form and come in right above 108, you know, between 108, let's call it 108.15 and 108.30, maybe 108.40, depending where, you know, the 200-day moving average comes in around 108.35. So a lot of technical resistance up there, even if the euro does get a little bit of a boost. And then you also have to factor in, again, we have U.S. economic data 15 minutes later, after this comes out, but we're really looking more in the press conference. But then you have the Fed next week and other central banks to factor in as well. So a lot of moving parts here. So we got just a couple minutes. Ryan, what are you thinking? Because, you know, a lot of us were sleeping during the flow show today. Overall, what are you thinking here?
Well, just like Kay was saying, and we spoke about on the flow show, if you know, for all the talk, for all your opinions and whatever, there's just one level you need to worry about. It's the 107 level. If we finish the press conference above it, then it's likely to be support again, and we see some upside. If we finish the press conference below it, and we see it as resistance, then you know the downside's coming. So, you know, all your upside levels, 108 levels, 106 levels are all valid, but they're only valid after the press conference and which side of that 107 line we sit, because we've come through central bank heads, we've come through data, everything, and we can't break that 107. So that's the marker for today.
So let me, and thank you, K-Man, let me ask you this. And I mean, it seems like everybody that I've seen and heard, and myself included, you can throw me in this bucket. I'm expecting a higher euro so I can sell into it. That's you know, it's like kind of like that's like everybody's plan.
Yeah.
But what if the euro gets clobbered today?
Yeah, I think, well, I mean, you know what? 2 out of my 3 scenarios, in my opinion, are going to be relatively at the end after the meeting, after the press, are going to be relatively bearish euro. And that's the way, actually, if you look at euro crosses that they are trading as well, euro CAD, euro Aussie and stuff. But there is that one outside chance where we get a hawkish hike, and that is likely then going to be back the surprise trade, because a lot of people are waiting to sell rallies. But I think that, well, I mean, if they hold, it's going to be a hold. Even if she talks hawkish afterwards, you're going to have some algo blip or so. But in my opinion, if they hold, it's not going to be good for the euro at all. But again, I think that the level downside is clear. 107. You close above or below is key for the euro today. Key.
Yeah. So the second part of that question was, and this is where I'm going to have a very difficult time doing it, is if the euro dips down to 106.50 or, you know, gets down towards channel support, are you going to be able to be a buyer ahead of the Fed next week, selling dollars? And I'm going to struggle with. I think it's going to
be very tough, because you're not going to see only euro dollar sell off, but also the euro crosses. And that's a double push lower. But then you have those US data, right? So we have to really take it until the press conference, I think. Unless you're all dovish over the statement, which is pretty impossible. Well, I'd say that would be the surprise.
All right, very good. Hey guys, just real quick, we got about less than a minute before the interest rate decision. I'm going to put it back over here on the euro, and I'm going to pull over data flash. I do want to point out crude oil just broke above 90. It's probing 90 right now. We have some very bullish charts. We've got targets into the mid 90s, and crude just continues to rock and roll higher. So just keep that in mind. You know, really strong move. Oh shoot, I need to put on, let's put on a 15-minute chart. Sorry. Let's here's the euro right there. Let me pull up that the data flash, and should be fairly straightforward for this part. But again, we got the press conference in about 15 minutes. So and Dale, we'll talk about all sorts of other things here after that. All right. Ooh, Euro's getting a little bit of a
hike.
They hiked.
25.
Yep, they did. They hiked. So now
we're
probably,
wow.
and
You're giving it back in a hurry.
Yeah,
let's
everybody's
see the details.
Give us the, oh wow, look at the look at the euro just spiked up and reversed. How many people were waiting to sell into that bad boy?
You were.
Well, yeah, I mean everybody was. Oh, now the euro's getting clobbered. Oh, wow.
Yeah,
So the
breakdown.
3.2% they see in 2024
and 2023 up, I think.
Yeah. Dollar.
But 2.1 in 2025 versus 22.2.
Nice coverage, guys.
And we still are maintaining 107 ahead of this press conference. So just a little bit of heads up.
Why it went down, to be honest with you. Nothing I can see on QT. Yeah, it's a hike, and no signal that they're going to pause after that or You know, we'll have to wait for the presser on that one. But
Yeah.
yeah, I did say, I've been saying all week, it's the risk is higher that they hike than the market was expecting. They ramped that up, and they've gone and done it. So the risk now is that she talks about a pause, or you know, that this might be the top or anything like that, and then you get your dovish scenario for the euro.
Yeah, now what you're going to have is the euro really breaking lower, and just look at the dollar index. Now think about this, guys and gals. The dollar index is firming up because of the euro. There's a good chance that the euro is going to continue to slip, as this is I say one and done, but it is. They just raised rates. It's probably the ECB is going to be steady. Here we go. The euro is below 107. We're going to be steady for quite some time.
They seem to be saying they have reached levels that could bring inflation down.
Oh, look at that, which is interesting,
so,
because their forecast of do you see any of the forecasts from last year that Reuters, or next year, that Reuters published the other day about 3%? Is that what anything on the staff there? I know you guys reading the Bloomberg headlines as they're coming across. So
what's that? Sorry,
the staff projections of 2024.
Yeah, they went up 3.2%.
They did go up 3.2%, but they feel that they're at levels that they can keep that will contain inflation. That's interesting. Now from here, you're probably going to see the euro start to slip. Now, if retail sales come in strong, which I'm not expecting, but if they are, and producer prices are strong today, just in the next 10 minutes, we could really see the dollar come out of its shoes. You know, one thing I want to point out about the dollar, and Dale, you and I are a long time, well, you know, Ryan and K-Man, all of us here, but we're all long-time studies of price action. One of the things that's the biggest tell in price is when you get a move of what's a good way to describe it from an Elliott wave point of view? An impulsive move.
Yeah,
right. You get an impulsive move higher or lower, and then you just consolidate at the highs or lows. The dollar index has had a very impulsive move, a couple of them actually. We had a very impulsive move here. We couldn't even retrace 38%.
right.
We rallied again. We're consolidating gains. The risk becomes that the dollar breaks higher now that the euro is weakening, especially if U.S. economic data continues to surprise us to the upside.
You know, what's interesting is U.S. dollar yen isn't getting a pop with dollar strength today.
Yeah, the U.S. dollar, Japanese yen, you're right, Dale, and a lot of it might be factored into the euro crosses getting hit. You got the euro yen that's really under pressure right now. K-Man, you have any thoughts there, being that you're next Japan desk trader?
I think it's the market is trading it as it should right now, and now we wait for the press conference and the US data. You're rightly safe. We get any hint at better US data, that's probably going to be giving the euro another knock on the head. But we have to, for the time being, we have to respect that we went back down to the 106.90, and it's holding for the time being. So stretch that 107 to 106.90 on the euro before really diving into anything, I'd say.
Yeah. I think this euro is going to be really, really careful around here. Just one thing I want to point out technically with the euro, just so you guys can all see it. The last move higher, kind of, you can call it the last impulsive move higher we saw throughout a course of a week. That 161% extension comes in around 106.50, which also matches the lows from back here in May. So that might be a natural target for the euro lower. Longer term, I want to show you guys something else. So if you take the low, and this is here, let me delete this one. We don't need this for right now. Let me get rid of this. If you look at the low from October of 2022 to the highs, right, when everybody thought the euro is going back to 125, the 38% retracement also comes in at 106 and change. So really, really important supports coming down here around the 106 level as we make our way down there. There's, because the 38% retracement, the reason why that is so important from a technical standpoint, because it really is where the rubber meets the road, whether you have a continuation pattern or an actual, you start seeing a longer term reversal of a trend. The 38% retracement, if you can hold it, marks continuations typically. So oops, I didn't want to do that. I wanted to do this. You get a 38% retracement. That means there's a continuation, strong possibility of it if you can hold it. If that doesn't hold, then you build a longer term, risk of if this 38% retracement, which happens to be right here, if that breaks, then you have a longer term reversal, consolidation. I'm talking months from now. But that is going to be a really important level technically for us to be watching, is right around the 106.50. So just again, longer term stuff. I know there's a lot of people that are positioned long euro institutional wise. You just look at the CFTC data and it still hasn't faltered much, even with the fall that you've seen in the euro over the last couple months. Those longer term traders will start giving up on the euro on a dip below 105. You'll start getting people targeting parity again. That's just plain and simple. So all right, let's fast forward a little bit. Let's talk about PPI and CPI really quick. So and Dale, I haven't gotten your views here. Dale, what are you thinking right now as we go into North America? We're heading into the end of the week. Strong equities. I mean, equities continue to hold up here. What are your thoughts?
Baffling.
Can't believe it, right?
Yeah, especially with Apple falling apart, and the day before Oracle was down like 10% in a day. Yeah, it's baffling. So I'm kind of like in this 4,500 level. If it starts piercing it, closing above it, it's going to look pretty good. That's S&P, all of them. Look at Apple.
Yeah, I was expecting some sort of excitement with this iPhone 15.
I mean, you have a runaway gap happening there. Okay, so Amazon made new 52-week highs. They're exploiting things that haven't moved before. Microsoft's putting in a lower high. I started buying puts in Amazon. I'm crazy, but
you are crazy.
Yeah,
I'm
baffled though. There are some. I didn't think the market would hold up this well with Apple selling off the way it has, and boy, those regulators were smart to rebalance Apple before this decline.
Yeah.
And that's something how they knew.
Yeah, they always know. They always know.
They're like the house.
That's why the
Vegas.
sources knew, Dale. That's why the sources knew that the ECB was going to hike.
Yeah.
All right. Well, appreciate your thoughts here, Ryan. Sterling trading super heavy. The 200-day moving average coming right into view here. I know you've been playing and off of this level quite a bit, but longer term, you can see that this is the breakout point, 124.50. You got the 200 DMA. Does this get a little scary for long-term longs here?
Yeah, it's the 38.2 fib, I think, is around there on my chart. I need to double check that. Yeah, it's definitely on the back foot. It's the same as a lot of dollar pairs. It's found a low, it's nudging along the bottom, and it can't bounce significantly at all. So yeah, while we can't bounce, the danger is we break down. And the BOE could do a similar move to the ECB today, hike and say that's it, we're done. And then there's going to be plenty more downside for the quid. But you can't say that now because we've got the Fed before the Bank of England and CPI before the Bank of England. So who knows where we'll be at before we get there. But it's not looking too hot for cable at the moment, in the fact that it can't bounce at all.
It is not looking hot for the sterling right now. It really isn't. Now, Aussie, little bit of a different story here. Australia. Yeah. So the employment data literally this is when the employment data came out. This is the rally that you saw an hour before the data. I was like, I'm sitting there looking at it. I was looking at it on my phone because I wasn't in front of my computer, because I do have to break away from 12 hours straight in front of my computer. I was sitting there looking at my phone going, man, they're running this thing up ahead of the data. But good data came out, strong employment. Aussie took off. What do you make of this move in the Aussie? I mean, you got all this China stimulus. Is the Aussie a buy down here, K-Man? What do you think?
Against the dollar, I don't know, but I like what I see on the Aussie through the crosses.
Yeah, look at the sterling Aussie. This is
Aussie yen, Euro Aussie, just name it. Aussie is doing better. It's undeniably doing better, and that's likely going to prevent Aussie dollar from falling out of bed, unless we got bumper numbers out of the US, of course.
Yeah, really strong
Aussie
moves out of the Aussie now.
Yeah.
And as long as risk holds up,
I like that Aussie yen. I really do like it, especially if we start to get close above 95. It's really looking like it could go up.
Yeah, it could go a lot like this like this move that you're seeing in crude oil. And let's look at crude now. Crude continues to power higher. Ryan, what are you thinking here? Do you think crude can I mean, we're at 90 right now. Can we continue to stretch our legs, and will it start to affect equities? I keep thinking we're at that level where, you know, higher crude, people look at well, we're going to get a view of retail sales here in a second, but people are going to look at that and say, wow, it's going to crush demand. Price is going to crush demand, and the global economy, it should weigh on risk, but it hasn't been the case yet. What are you thinking here with crude?
Nothing does.
No, nothing.
No, what happened to the wrecking ball dollar?
Yeah, I mean, yeah, the
the dollar, they take the spikes off the ball and it's now like a sponge. They have a sponge at the end of the wrecking ball. I don't know.
And here's something that's really interesting. I don't know if you guys saw this. It was I made it my chart of the day yesterday on the ForexAnalytix blog.
The bonds are coming out here.
Bullish reversal in the bond market yesterday. I mean, yields came off. Big reversal in the 10-year. It's playing, you know, higher right now. 30-year, you know, is doing
not
the same.
Not as much,
but yeah, I mean, it's all the lot of the lower end of the curve. But
yeah,
hey, you know, you're seeing yields come off, and what the thing that's scary to me is if you start to see the lower end really come off, like the 2-year, 5-year, 10-year. That starts to reverse. That would signal to me that we're probably a little bit more risk averse near term. So, but that 10-year looks
not today.
Pretty gnarly. No, not today.
You know, I kept thinking that too. That if we had a bond rally, a note rally, it was going to be due to some type of risk off. But you know, Andy explained it pretty good. He said an inflation cycle, to have stocks go down, you need bad bonds. So if the bonds are turning, I guess it's melt up time again.
Well, we got just a few seconds till the news. Here's your dollar index. There's your S&P. There's your yield over to the right. Let me see. Oh, shoot. No, I couldn't do it over here. Let's grab the data flash. I didn't mean to close that out. And here we go. Just a few seconds. Jobless claims, retail sales, PPI, all sorts of crap. Okay.
Retail sales hot, 0.6%.
That consumer.
Hot. Bet against American consumer, and this is what you get.
Core sales, they're up 0.1, was expected to fall 0.1, so a little bit flattish on those. Look
at the jobless claims. The euro is just getting clobbered right now.
Yeah.
106.70. Wow. Wowee. Wow.
That was a market waiting for the data before moving on the ECB.
Exactly. This is the level where the option boys were pricing the straddle. So 106.70.
Metals getting hammered. Everything. Yeah.
PPI dribbling in higher, 0.7 on the month versus 0.4 expected. Food energy trade 0.3 on the month. The rest of the numbers are dribbling through, but yeah, that's it's all going out. All hail the mighty dollar.
All hail the mighty dollar. And Dale, you were just saying, here comes the dollar wrecking ball. Well, here goes the dollar. And the market is not liking the fact that all this data is so strong. I mean, that's just plain
Coming
and
off
simple,
a little.
right?
Good.
Right.
Thank
I mean,
you, Lord.
yeah, I mean, the market is now thinking, hey, you know, we're all sitting there looking at it going, wow, I cannot believe the American consumer is this strong. Inflation's strong. You know, now we got the ECB press conference coming up in 15 minutes, but Dale has an interview with
Patrick Kareem.
Gold's getting smashed too. Gold is below 1900.
Yep.
Now I'm going to take you over here really quick, just for those of you, just to get some longer term views on gold. This is so I don't have to go ahead and redraw it all for you guys. Just here's what I'm looking for in gold. So, you know, if we can trade down to 1850, that's gonna be the level.
Yeah, I like that.
Looking for. Yeah, I mean, you know, that was from last week or whatever, but yeah, this dollar is on the move. Pound yen. Whew.
So do you believe in that full moon effect for silver? I mean, we were talking about $25 silver on that full moon. That full moon high.
Right here?
That was it. Yeah.
That was
the
it.
super moon.
Damn, man.
Yeah.
Only full moons I get are from the damn teenage kids on my block. That's all I get.
Well, we have a new moon coming up here Friday. It's Rosh Hashanah, the Jewish New Year. So maybe follow the lunar cycle for silver for a while.
Sell on Rosh Hashanah, buy on Yom Kippur, right? And that what
you know what? I always get that confused. So I just short on both days.
All right. Well, hey, everybody, this is what Dale was looking at for silver. If we can get back down to 20, that'd be a really nice. I think you buy it hand over fist somewhere down there, but
yes,
yeah, we'll see if we ever make it down there. I want to say thanks, Ryan K-Man, for being here, and thanks for prepping everybody on the Flow Show today, even though, you know, I was sleeping. I know everybody that was listening to you guys really appreciates that. If you guys don't listen to the Flow Show every day during the European hours, make sure you do that. Dale, thanks for taking us and navigating us through today. Don't be a stranger in the chat rooms, Dale. We love having you there, and you know, have a great interview with Mr. Bad Charts.
Bad Charts won, and they're so bad they're great. Patrick, great to have you back. And team, thank you very much. Excellent coverage of the ECB and all the numbers and prepping our community for it, and then the commentary of pulling the nuggets out of what was happening sure saved me a lot of time. So I'm sure it saved everyone who was listening a lot of time. Great job.
Cheers, Dale.
All right, team. Patrick, welcome back to F.A.C.E, buddy. Great to have you. It's amazing how time flies, right?
Hey. Yes, Dale. It's bonkers. Seriously, I had my alert on my phone. I said, "Oh my goodness, what? It's already time to hook up with Dale again." It's like I was surprised. I DM'd you. I said, "Is it today?" And you said,
"It's time." You know, becomes a little less meaningless when your clock is the markets instead of a clock. So, interesting action we have here, Patrick. What's top of mind for you? You know, I'm looking for about 20.5 in the silver. And I'll tell you, like I've told everyone else, once we get down there and gold works a little lower, I won't talk about the short side of the precious metals market again for at least 2 years. So I'm waiting for this and looking for, you know, great entries sometime this fall.
I'll tell you one thing, and I'll share my screen if you don't mind.
Yeah, I'd appreciate it. Yeah, go ahead, buddy.
The metals are financialized, and they are the gold silver ratio is that chart looks exactly like the dollar or the VIX. And if gold or silver are getting sold off, but silver is getting sold off more, and the gold silver ratio starts spiking up, that's telling you, and the VIX is probably, if it confirms that the VIX is going up, if the DXY is or the US dollar is getting strength versus let's say the euro, it's hold your breath moment, because that thing could crescendo upwards and a spike and then generate some type of market sell-off. It doesn't have to be that way. Sometimes these spikes, they get subdued, and then after that it just rolls down. But I'll take you guys are like, we're super short term there, so I'll zoom out. Maybe that'll help nuance the big picture versus the shallower end of the picture.
Okay,
I
yeah,
did this chart.
I like telescopes, man. But I survive with my microscope.
Yes.
Even though I have a telescopic bias, it still is important for me and my followers to be tactical.
You need both. So you need any industry, any team in any type of industry. You need a strategic roadmap. That's where the big picture comes in, and then you need tactical a playbook to be able to navigate that longer term roadmap. So you're not always waiting on the sidelines, suffering a 30% drawdown. You're able to go in and out on the smaller time frames, but always understand where you are in the macro cycle, because that will drastically shift the odds from your shorter term trades, your counter trend plays from panning out. It's like sometimes you think that, oh, silver's, I have a support for silver, let's say at your rising trend line, like I saw, whatever, 20 bucks.
Yeah. Oh,
but
okay.
If on the longer term, you're not looking at, and let's say it's above a 7-year moving average, or there's another type of support on the higher time frames, that's going to interfere with that shorter term target, it's dangerous, right? But we could do, I'll do silver after if you want, interactively.
Okay.
But you guys were talking about oil and the impacts of oil on US equities. Here, the best thing you could do, guys, just do a ratio chart. So here I have the 3 greatest moments, or the 3 most important moments in chart in financial histories. I didn't put the 1939 one. So let's say for the last 70 years, every time SPX has rolled over versus energy, crude oil, you had to shift your focus, because now all the narratives of why energy is headwinds for growth stocks, all that stuff, all those narratives kick in, right? And oil's up, inflation's up, purchasing power's down. Then after that, gold, silver, all the commodities, they price in that destruction of purchasing power. So look at this beautiful rising trend line from 1949 all the way to 1969, SPX versus crude oil. Yeah. Momentum breaks down, huge violent recovery for SPX versus crude oil. But look, after that, you're on the wrong side.
That's the oil embargo. That's the oil embargo, bro. Right?
Sure, whatever narrative, I don't mind.
Yeah.
Seriously, if it wasn't even oil embargo.
But look at the gaps on that one compared to the other two. So that was an embargo move.
Well, yes. Well, the question is, we'll never know.
You weren't even a baby.
Well, yeah, I wasn't even born yet.
You weren't even in a gas line, man.
You did? You went through that?
Oh, yeah.
It's weird because I asked my in-laws and the people who lived in Canada, they didn't have any issues. They don't remember having issues at the gas station in the 70s at all. So was this an American thing or worldwide?
Yeah. Well, I lived here. So this is what I saw. Yeah, there were lines, and they were going to they were alternating days you could drive based on, what you had on your plate. Anyway, so here we are again, is what the analog is showing, right?
Well, yes, and here's the 1982 to 2002. Look at that beautiful bull run. Essentially, this is just telling you capital flows are favoring SPX, but now you got a beautiful breakdown in 99 or 2000, retest, and down she goes below a wall here. Look where we are today. This is a beautiful 2008 run for US equities versus energy. US stocks did a blow off top. For me, the SPX, US stocks have had the blow off top versus energy in 2020. That's it. That's the blow off top in US stocks. Whether they melt up nominally, adjusted for an inflation proxy, crude oil for energy, it's done. It's like that type of spike here.
Yeah, parabolic.
Oh, Jesus. That's on the log scale. That's bonkers there. Look, it could recover, but the probabilities right now, and you see here the bear market rally, look at that, how violently SPX has turned to fall versus crude oil. I don't know, maybe you're a head and shoulders expert, but for me, the important line is 1, 2, 3, 4, 5. That's a 5-point rising trend line. A break of that is significant. And it's just not a break of a trend line. Oh, it's the end of the world. It's the angle of that trend line. It's getting less and less steep, the trend line, right? So if this breaks, Dale, you're probably looking at that 38.50 level right here, a horizontal type of line. And after that, well, that's game over. Below that is just headwinds for SPX. And this is the thing. People have to remember the SPX is not just growth stocks. SPX has 11 sectors in it. But at the beginning, of all at these switches in bull eras, usually there's one of the sectors that's overweight. So here in 2008, it was probably oil that was overweight in the SPX. And as this went up, the money started rotating out of materials, basic materials, out of oil, energy, and it started going into tech, right? Tech, and all that stuff.
Yeah.
So that always helps. So often people, they want to see the end of the world for the SPX, but it's very hard to kill the SPX. That's a beast with 1,000 heads because it's 500 companies, and it could rotate out the crap, and you just rebalance into the more performing assets, right?
It's a hydra.
It's a hydra. You can't kill the SPX. It's not like, that's what I told those Bitcoin guys. You got to be careful. The Bitcoin cannot rotate itself out. if nobody wants Bitcoin anymore, you've got to end on your hands.
Go to Ethereum, rotate into Ethereum. Sure,
they go to Ethereum, but it's not an index. So the price of Bitcoin has there's no bottom. The SPX, there's some type of bottom because it could always overweight the other sectors, right? In these in these micro cycles. But what I'm saying is Bitcoin could disappear off the map, and nothing's protecting it from, it's not an index. It's not weighted. It cannot rebalance itself. It's like a Canopy stock. You know, Canopy went up and down. It's like an Enron that could go bankrupt. It's one of these things, right? It's not a hydra of 500 heads. The Bitcoin has one head. Ethereum has one head. If nobody wants Cardano anymore, that's it. It's done. You know, it can't survive long term for as well as the Dow can, as well as an index can. That's my.
Well, I thought the market would be a lot lower with how Apple has been getting destroyed, right? And yet it's held up so far pretty good with Apple. You know, they rebalanced Apple before Apple took the hit. And yes, I actually predicted 3 months ago that China would retaliate against us by going after an icon like Apple. And it happened.
You got to look at this, man. This is the Apple chart.
Yeah.
When I zoom out, I'm not particularly worried for Apple. It's above a 3-year moving average. Look at my goodness. It did a breakout here. Now it's like, so people, let's short Apple to death. Well, okay, fine. Maybe if you zoom in.
Where's the cloud come in underneath it? Where's the cloud come in?
Look, Apple, you short these things here. I'll show you where the low risk shorts is here. When it starts below the 3-year moving average, below the cloud, then you have a chance. Then you're in a downtrend. Maybe there's probably a better fitting moving average there. But this is still, it still has tailwinds, right? It's not totally destroyed. Maybe, you know what, Apple, my line in the sand would probably be here. If it closes below 139, now you got some type of distribution top there happening. That's not
okay. 140 is your red line.
Yeah, probably here. If this happens, see, that's a possible bearish roadmap, right?
Yeah.
But this is what happens usually for US equities. Bullish expanding wedges. You've seen these. That's what they do. They love doing that over and over and over.
Like broadening tops.
Yes. So this can probably happen. And after that, it's you got to be very courageous to short US equity, US equities. They could hibernate, they could go sideways, but
how much more do you think the dollar has left here? It's been very persistent, relentless. In fact, what are you thinking here?
Well, the dollar. So essentially, this is the Euro USD pair, right? I try to always nuance it because versus other currencies, it's not looking as good. Look at that. That's versus the Swiss franc. That's not very good.
Right.
So you always got to measure. Okay, well, look at the DXY. I could have overlaid the Euro USD. So here it is. Look, it's what do you want to say? It's still in an uptrend. It's above the 3-year moving average. It did a blow off top here, but now it's
I like that 108 level you have. That would be the next wall.
Yes, look at this. Because historically, 1972, a wall is essentially resistance, support if you're above it, and it's resistance if you're above. Here in 1976, here 81, 86, 89. Here was the top. Let me zoom in for you guys. Look at that top, especially at the top. Once that breaks down, You see, try to get back above a few months in a row, couldn't do it. And so that 108, that was a 2003 rollover. And here, try to get back above 2016. The wick here couldn't even manage, but now look, it's above. So that, well, no, not the 108 there, but the lower levels here, it's above that. So it's stuck in, it's stuck between that range there.
Are you feeling discouragement from people who are silver bulls? I mean, they've been looking for, the short squeeze to happen for a few years now. Looked like it could have at that last rally point up at 25 before it turned back down. Are you starting to get that sense? And I'm also getting the sense that for as discouraged people are with the physical market, they're even more so discouraged about the miners, the gold and silver miners.
The miners are just terrible. Seriously, the miners is one of the most terrible investments anybody could do. It's you have to time them precisely like a surgeon, and if you don't do that, you're just gonna feel sick to your stomach. I feel it because I hear it. People have.
Do you own any? You own any?
There's a couple of miners I have, but it's like it's nothing. It's like it's very low position size. Like I'm risking less than 0.25% on each of those, and it's a while back there. I had them. They had good charts, but they have massive headwinds because the miners, they track gold versus SPX. Let me do the silver. I'll show you what the miners need, and then silver is super easy, guys. Super easy. Since this breakdown, guys, these walls, you got to respect them. Since the breakdown in 2013, look at this massive top here, massive top. Breakdown 2013, right away, you have to put an alert there because now that $28 or $27, $28, $29 level has become a wall. Years later, guys, that wall is still there. And you stay clear. Look at that. Even here, that's why it halted here, here,
what a memory.
The markets have a definite memory. So silver there's been no reason to be in silver. The only play you had for silver here was this breakout of this base. Once you hit that wall, you run to the hills, and then you wait until the 28 is broken. But what's happening now, because it's a descending angle, this trend line now has become very important. Yes, the final breakout line is 28. But I call this the early breakout line. And if that level here over time, it diminishes. So before it used to be 25.
Sure looked like it was going to go a month ago.
Well, it didn't. I'll put on the quarterly.
Leave that for a second. I heard someone calling silver. It was that guy Carter Worth on CNBC. You ever watch him? Saying we have a cup and handle developing, and he was bullish. So we could still have the handle develop here on silver above $20 and then go.
Yes, this is the thing, guys.
Right.
A pattern is only a pattern once it breaks out. Repeat after me, guys. A possible cup and handle is just a possible cup and handle until it breaks out.
Possible.
Of course.
Right.
Look, I'll show you something here.
Because the handle could break off the cup.
Yes, of course. Look at this. I'll show you. This is great, guys. I did this recently. Here.
Uranium.
Yeah, this is Cameco. So people in hindsight, I bought the dip in Cameco. But seriously, until this thing breaks out, you know what this looks like? It looks like a bear flag. It looks like a massive halfway flag. What's to say that let's say you're not doing weight of evidence. What's to say that you're not dealing with something like this there? Seriously.
Yeah.
You don't know yet.
Pull back. Yeah.
People always think, I'm buying this. Yes, of course, there's bullish signals. There's a fight.
That's another reason they're ignoring the miners. I'm waiting to buy the miners, I guess, to try and be a surgeon. And it's just been an easy ride being long uranium issues.
Oh, goodness. And that's the thing. If you're not outperforming other instruments class, people should really ask themselves, why am I in this precious metals, the miners, and they're not breaking out yet? They will have their day. But right now, here, look, I have the gold versus SPX ratio here below in the candles, and the orange is the gold and silver's precious metals fund since 1968. So that's actually an index of precious metals, gold and silver. And that kind of, because it's an index, it survives. It's almost like a best case scenario. And look how it tracks the ebbs and flows of the SPX. Look at that. The gold versus SPX is just two major asset classes. It's a rock versus actual companies. That price, that ratio chart, these miners who have supply and demand mechanics, they have energy costs, they have different CEOs, different lands, different sampling rates on the. But why are those miners as an aggregate tracking the gold to SPX ratio? Guys, think this through, because that's telling you that all the fundamental analysis you guys are doing on all these miners is practically useless. Yes, if you really want to do it, but overall, what's really moving the gold and silver miners is gold's capacity to outperform SPX. And you'll see here in the 2000s when the miners went bonkers, and that's the clickbait stuff that allowed these the mining newsletters to try to sell, oh, look, these great gains. But look, gold was starting to break out versus SPX. Even here, look what's happening to gold versus SPX, guys. Now, look at that. Yeah. It's not breaking out at all. At all. We had a chance. I've been monitoring this for so long. I've had this thing under my radar. I have the 0.5. So when gold is going to be worth of half of SPX, this whole rally here from the bottom, I spotted it, I think, and I kept tracking it. I told people, if ever we get a convincing breakout above 0.5,
yeah,
here's that.
Looks like we need one more low for 3.
Well, yeah, I think it's getting carved out right now. Seriously, with all the evidence. Look, I'll tell you what's very positive for gold, silver miners, and all that. Uranium and oil are doing great, especially uranium. So
yeah,
it's rare that you won't have a gold and silver bull era. I'm not sure it ever happened. If uranium, chemical, and all these things go in a secular bull era, it's almost you have to have a gold, silver, a commodities bull era. They go hand in hand. So right now, with gold and silver, because they're financialized risk on, risk off instruments, they are pricing in the risk of a market sell-off. That's why you have pressure. Eventually, as SPX gets sold, if gold gets sold off, but less, this ratio.
That's what I'm looking for.
This ratio will go up. It will go up. And then when it breaks out, the miners will love it. The miners will love this ratio. They'll love the capital flows. And then you buy your miners here, guys. You have to wait. It's just, another low. I don't know. Yes. Yeah. How low is it going to be? I don't know. Just, you have to wait, guys. This is the thing. While everybody's looking here, I did do bullish roadmaps where it looks like that. And your eyes, you just see that. Oh, I want to buy the low here. Look, it could keep going down, guys. I'm sorry, but look, there's actually a breakdown here. You don't know. That's a valid halfway flag breakdown. So you don't know where that thing's going to end, right? Why be a hero? I don't get it.
Okay.
That was my rant. But I'll tell you one.
A good rant.
Yeah, I'll show you one thing here. The Swiss franc is the most, out of the major currencies, the Swiss franc is the most powerful US currency. It's stronger. I showed you it's versus the US dollar. The US dollar has been losing versus the Swiss franc forever. If gold, this is gold price in Swiss franc, guys. If gold is able to outperform the Swiss franc, that should be the benchmark for gold. It's not if it could break out versus the US dollar, because the Swiss franc is a stronger currency than the US dollar. If gold is able to break out versus the Swiss franc, then you have a bull era for precious metals. That's very, very telling. And right now,
what would that take? Breakdown?
You need a breakout here. So this is gold expressed in Swiss franc. If you want a bull era for gold, you want gold price in Swiss franc to go like this, right? Up. You want that. It was on live support last month there. Look at that wick. It was below.
Yeah.
It was really, really, really dire right here there. That wick, it was.
Yeah.
So what you want is you want the Swiss franc to get a little weak here, just a little weak. You want it to weaken up, and you want gold to start outperforming the Swiss franc. And if ever this happens, then we're golden. Then you know that gold is outperforming the Swiss franc, which the Swiss franc is probably going to be outperforming the US dollar. And then
it is.
You have the top dog, right? You always want to be in the instrument that's beating the other instrument. It's like you're at a bar, Dale, and you have access to your dream wife. Why are you going to go and leave with the girl that's not your dream wife? It's beyond me, right? Always go with what you want. So
because she doesn't want to get married.
She doesn't want to get, well, if she doesn't want to get married, then she wasn't the girl for you, right?
I was just kidding, man. Yeah. Anyway, Patrick, that's very interesting, the Swiss comparison. You're always interesting, buddy. And you're always looking well beneath the surface of things, and your intermarket relationship work that you and Kevin do is excellent. So people want to get more of you and your work, best way.
Well, guys, it's all free on Twitter, Bad Charts One. But the real in-depth stuff, it's on my website behind a paywall, northstarbadcharts.com. Go check it out there. There's a lot of value there also, but there's a lot to learn, guys. It's every day there. It's a journey. Every day we learn, we share, and hopefully people get an edge out of that there and stop listening to these guys saying it's going to the moon.
Yeah, and Patrick also and Kevin have a great YouTube channel, and they also bring in good guests, and but really interesting work, very long-term in nature, a lot of it, and really helps you see the forest from the trees. So appreciate you being here and sharing with us today, my trading warrior brother.
Thanks. Look at the GSR also is looking dangerous there. Yikes.
Yeah.
Thing. All right.
Yeah.
All right. I'll let you go. I could talk with you all day about this. So we'll do this another time.
So we'll do it in winter. I expect that we'll be singing a different tune, and the markets will be way different by December.
Wow. Can't wait to see how that unfolds.
All right. So thanks, Pat. I say hi to Kevin for me. Follow at the minimum, follow Patrick Kareem at Bad Charts One. Go to their website, check out their work. It's eclectic, exotic, and important. So thank you, buddy.
All right. Thanks, man.
All right. So everyone, hope you're having a good day, good week. We'll wrap it tomorrow for TGIF. Have a great rest of the day. And don't just count your pips, count your blessings. Be patient, let things develop and come to you. Adios. See you, Marina. Nice meeting you, Monica. All right. Adios.